Very good morning. Welcome to Chartbusters. I'm Nigel D'Souza, and joining me as always is Mangala Malu. We have started on Monday. We've started on Monday in style. The Nifty continues to hold in the green with a gain of around 60 points odd. Mangala, we've got a couple of managements. Let's get straight to it.
Let's get straight to it. It's a good day. So let's get in the management of JSW Energy to understand the power sector, the impact of the elections on the power space. JSW Energy, Sharad Mahindra, who's a joint MD and CEO, joins in to take a few questions. Thanks a lot, Sharad, for joining in. You know, with the formation of a coalition government, do you expect to see a change in policy in terms of the power space? What's your wish list for Modi 3.0?
In fact, in power space, with whatever we have seen has happened in the past, there's a recent elections, the outcome, we strongly feel that whatever the way the country's economy is growing, we don't expect any change in the growth path for the country, because a lot of work, if we see, is in work in progress. And the way, especially talking about the power sector, which is driven by the, in general, economic growth, which is driven by the various growth in the infra sector, we don't expect that there will be any significant change in the dynamics, what we have witnessed, especially in last 2 years. Especially when we see last year, the significant change and the milestone which was achieved was that country's ambitious target of adding 50 gigawatt of renewable energy every year. Last year was the first year when the bidding and the outcome and the award was in excess of 40 gigawatt. And that all has to come on ground in next 2 years, 3 years time. So we don't see, and the way the power demand growth we are seeing, what we have witnessed, especially also the extreme weather conditions, we are quite confident that the same growth pattern will continue. And we don't see any significant change or any change in our growth strategy going forward next 5 years.
All right, sir, the power demand supply is still a concern. Evening peak demand is unable to be met by solar power demand. So what trust do you see towards renewables?
As you rightly said, that the peak demand, when it reaches in the evening, and it has been a challenge meeting the peak demands. So their plain solar, plain vanilla is not going to be the ideal solution. That will not be able to meet the peak demands. So that is where the customized solutions, which are coupled with storage to give the green power, is the thing which we are seeing that is taking shape. And we are sure that along with solar and wind, it is the storage which is going to play a key role. And countries breakup, if you ask for 50 gigawatt, this is basically a breakup between wind and solar energy. But along with that, coupled with storage, and we have seen some of the FDREs bids also have started taking place. Some states have come with plain storage bids also. So that is which is going to gain a momentum in this year and going forward also. And we at JSW are in line with this growth plan which we have. We have done the study, and that is the reason that we have already started now one of the largest, Asia's largest battery energy storage project. The work at ground has started, and we are confident that by June 25, this large capacity of storage, energy storage, will be commissioned.
All right, energy storage is one of the big thrust areas for you going forward, and you see that being commissioned by June 2025. What about your own green hydrogen plans? I mean, what's in the kitty so far? What's been the capex? When does that come on stream? And will it be, only used for captive consumption, or there is some, other revenue that you can generate via it as well?
Yes, I think we have just started again the groundbreaking, and the project work has commissioned just about 10 days back. Which is country going to be, as on today, the country's largest green hydrogen project, which is 3,800 tons per annum capacity with 25 megawatt of solar capacity. This work has started, and this is basically we are confident we'll be commissioning in the current fiscal Q4 of current fiscal only. And this is basically to take care of the JSW Steel, our captive requirement. Because JSW Steel is also venturing into green steel. So this will be a major step in that direction. And also, this will be a big learning both for us as a supplier and also for our group company to use green hydrogen in steel making. And as we have already signed a MOU with our for captive requirement of almost 90,000 tons per annum by green hydrogen by 2030.
All right, sir. Bihar has high power purchase cost that in comparison to the national average. They are likely to push for MBED. What would this mean for JSW and the power space as such?
See, when we talk of, we have heard also that one nation, one tariff policy, which the state has already made the statement. See, this is something which is have been under discussion for quite some time. And what I feel, seeing the distributed usage pattern also for each state, because Bihar is majorly a agriculture-driven economy, the usage pattern there is significantly different when we compare to other states like Maharashtra or Karnataka or Tamil Nadu, which is manufacturing percentage to the overall state economy is high. So I think one nation, one tariff discussions will happen. I think there are definitely challenges to arrive at a consensus, and we feel that it will still take some time to arrive on a decision for this one nation, one tariff policy.
All right, that's still some time away according to you. But what's your view on the likely price caps on both variable costs on power sold on exchanges? Do you have significant untied merchant capacity?
See, with the way the power demand is growing, and we are seeing the kind of peaks we are seeing, especially in the evening peaks and the morning peaks, and during the daytime with the increased solar capacity addition, which is happening and will continue to happen, definitely there will be excess power available during the daytime. That is what the scenario is likely to be. So, but evening and morning peak demand, the capacity addition is required. So that is where what we have decided is the storage is going to play a key role when there is excess power and the power cost is low during the daytime. That is the power which will be used for storage to take care of the evening peak requirements.
All right, sir. RBI mentions that higher provisioning will be needed for infra and power projects. Do you see tightened funding environment?
No, we till now we haven't experienced anything, and I feel that again it will depend sector also or companies also, and also the records of execution. So we have deliberated. We don't expect any impact on us in term because of our track record, because of our healthy balance sheet. We don't expect any impact on us.
All right, and what about merchant prices? How have they panned out, and how do you expect coal prices to move from here?
See, one is that merchant prices, as we said, on a RTC basis, we are seeing a slight moderation, and that is only because that during the day when the solar power is available, the tariffs are down, but mornings and evening peaks and the night power requirements, the rates are high. So on an average, we expect the levels what we witnessed in the range of 5 rupees 30 paisa, 40 paisa last year, it will remain in the same range. And coal prices, if we see, have been quite stable for last 6 to 8 months, and we don't foresee any major change in the coal prices, and it is expected to remain range bound.
All right, sir. At the end of Q4, you had mentioned that you're open to both organic as well as inorganic growth plans. Any acquisition targets that you've identified? You've taken 10,000 crores of enabling provision as well, so you're bracing yourself for something big. Tell us more.
When we say that whatever our greenfield capacity additions which are going to take place, we have earlier announced of reaching 20 gigawatt by 2030, as I have said earlier also, and 10 gigawatt by 2025 in the current fiscal. So in the first phase, we are absolutely confident, and we'll definitely be crossing the first stage of 10 gigawatt in the current before the end of the current fiscal. So that stage, what we have said is happening. We are absolutely sure because the work is already happening. Work in progress is there. And in addition to that, 20 gigawatt, what we have said by 2030, as said earlier also, we are quite confident with the kind of order book which we have built by participating in the competitive bidding space. It will be happening significantly earlier. So this is one definitely we are sure that our plans, we will be achieving 20 gigawatt numbers much earlier than what we have stated earlier.
All right. It'll be good to know that you will be meeting your guidance, at least for the first phase, much earlier than what you had stated. What about the acquired in Bharat Unit 2? Has that been commissioned in the first quarter? What would be the EBITDA contribution, and any update on the WTG manufacturing?
See, in Bharat Unit 2 commissioning, as I have said in quarter 1, the work is in progress. And we are confident that this will be happening within this quarter, or depending on, again, the stabilizing the unit and all, maybe 1 or 2 weeks here or there. But we are absolutely sure as of now that by month end, because the light up has already happened and the unit is stabilizing, whatever it takes will take. And we are sure, quite confident that by quarter end, or otherwise the spillage maximum will be for maybe few weeks only. Between June and July, the unit will be commissioned. And being again low cost power, being close to the mines and the pit head plant, again, this will again, as we have seen in Unit 1, the contribution from this side, the EBITDA are going to be quite healthy.
Let's appreciate you joining in and filling us in with all of those details. Look forward to chatting up with you as the quarter progresses. Well, for the time being, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Madhu Chandra Dey of moneycontrol.com joins us to talk about a stock that she's tracking closely. Madhu?
We are talking about Safari Industries that underperformed in recent times after a stellar show in the past year. FY24 financial performance was, however, very strong, with the company clocking revenue growth of 28%, which was much higher than competition, thereby indicating market share gains. The company also managed to improve its gross margin as well as operating margin. Hard luggage, which is sourced in-house, has already touched 65% of overall sales, and the company is now embarking on capacity expansion. This expanded capacity should help Safari in staying price competitive and should have a positive effect on its operating margin as well. The company is foraying into premium segment through its brand Urban Jungle. This change in product mix is also positive for its margin. Travel as a mega trend is here to stay. The luggage industry is witnessing a shift in favor of branded products thanks to rising income and increasing urbanization. The replacement cycle is also getting shorter. While Q1 FY25 is expected to be a little softer quarter thanks to the heat wave and the elections, we see this consolidation phase as an opportunity to buy the stock for the long term.
All right, Madhu, thanks a lot for that. With that, we'll step into a short break. On the other side, we have the management of Ixigo Travels. Alok Bajpai, the co-founder, and Rajneesh Kumar, who's the director and group CEO of Ixigo, to discuss their IPO, which is open for subscription today. Stay tuned. Welcome back. You're watching us here on Chartbusters on CNBC-TV18. Let's talk about the primary market action. The IPO that opens up today for subscription is that of the online travel agent Le Travenews Tech, more popularly, of course, known as Ixigo. Its IPO is open for subscription. It's a 740 crore IPO, which consists of an offer for sale for about 640 crores and fresh issue of 120 crores as well. They've raised about 300 crore plus from anchor investors. Alok Bajpai, who's the director and group CEO, and Rajneesh Kumar now join in to discuss the company's post-listing strategy. Thanks a lot, gentlemen, for joining in. It's your day one on D Street, seeking funds from investors. let's talk about a couple of things when it comes to your numbers and growth plans going forward, right? I was looking at your revenue CAGR over FY21 to FY23. Of course, that was skewed by the pandemic. So the number is close to around 64%. So what we want to understand is what's a sustainable growth in your top line from current levels, and what's the kind of margin band that you would operate in? I think, Alok, you're on mute.
Apologies. Even if you look at our revenue pre-pandemic to now, one of the things you'll notice is that Ixigo was the fastest growing OTA in India between FY20 and FY23. We grew at about 350% in that period. So it's not just the coming out of pandemic part, but I think the fact that Ixigo, which started as a utility app focused on solving for customer experience across trains, flights, buses, and now hotels, transitioned to become an OTA just pre-pandemic. And what you're seeing in terms of resurgence post that is essentially our large base of users actually starting to transact with us and starting to show up on the revenue and the top line as well as on the bottom line. I think if you look at the overall market, right, travel in India is going to be a 5.9 lakh crore industry across train, flight, bus, and hotel in FY28. And a large part of that, almost half of that is going to get done online. Now, in terms of our growth and potential, I mean, we are the market leaders on the train OTA segment, the second largest on the bus OTA segment, and the fastest growing one on the flight OTA segment. The overall OTA market is going to grow at around 18% as per the Frost & Sullivan report over the next 4 to 5 years. But I think in the past, historically, you can see that we've grown way faster than the market.
All right. So how much faster than the market can you grow? And by virtue of that, what could your market share be? It's a little over 6% right now.
So I think that's the aggregate market share on a GTV level. But if you look at the individual categories, right, on trains, we have a market share which is upwards of 52% in the OTA market. On the buses side, we are at about 12.9% of the OTA market. And on the flight side, we would be at around 5.3% of the overall market. This is the 9-month FY24 data. Now, if you look at the growth, right, the prior year on flights, we were at 3 and change. And you look at train also, we've grown from 46% to 52% on buses as well. We have grown from 11.5 to 12.9. So I think we continue to gain market share in all the categories we operate. In terms of penetration, because buses and flights, we are under-penetrated compared to the train category. I think there's strong growth potential that we foresee there. And hotels, we're just getting started. We launched in December.
Okay. All right. Hi, gentlemen. Good morning and welcome to the show, both Rajneesh as well as Alok. And wishing you all the best. And me and Mangalam, as well as the entire team, will look forward to chatting up with you as the time progresses. Want a couple of details with regard to your business. How do you see the revenue mix currently, and how do you see it, say, in the next couple of years, the transformation of your revenue mix? Give us a rough number.
So I think as you would have seen that we have very recently gotten into hotels, right? It's been in December last year. And these are very early days for us. But if you look at our revenue, how it has been evolving with time, we have had a head start in trains, right? So without making any forward-looking statements here, all I can say is that as our products keep evolving over time, I think some of these revenue mix might change over time because our head start on trains is what got us to like this market leadership position on trains. Because as you would have seen, the playbook of kind of solving for core customer pain areas on trains. We didn't start with ticketing, which is important to note here. We started by solving some of the core customer pain areas within train as a vertical. And then 2017 is when we started train ticketing, right? And then flight and buses, we became OTAs later. And hotels, the entry has been very, very recent, like I said, in December last year. So, what we have seen so far is that this playbook of solving, for customer pain areas first, and then kind of driving organic traffic through that. So you would have seen that 90% of our traffic is organic, and the reason for that obviously is that when you solve some of the customer pain areas and you're extremely customer centric, we're able to kind of drive a lot of organic traffic.
Got it. Rajesh, let's try to get a couple of broad band numbers, which is totally in line with the regulation. So don't worry about that, because we're not asking you for exact growth numbers from here on. On listing, we'll push you for that. I wanted to understand, how much of your expected share of your revenues can come in for hotels. As you said, you just started making an entry out there. So where do you see this number headed in the future? What's the aspiration? And also, how much of your revenues should come in from ads?
I'll take that one.
Please go ahead, Alok.
I think what you need to understand is that our playbook in terms of who we are targeting is very different here. Now, most OTAs in India that started about 15 years ago were targeting the flight first kind of customer and then monetizing from hotels once that customer was onboarded. I think ixigo has a very train first approach, and that is because we believe that the average user in Bharat or in tier 2, tier 3 cities, aspiring middle class in tier 1, trains is still the dominant mode of transport. Only 4% of Indians actually even take a flight, right? And I think from that perspective, our playbook in terms of selling categories like flights and hotels is very simple, that once we have sticky users coming to us for booking flights and buses, we are able to upsell categories like flights and hotels to them opportunistically. When an airport opens up in a town, we've seen, and we've declared this time, the numbers, we've seen the growth of flight bookings from our NBU users almost grow 90% year on year in FY24 versus FY23. So and overall flight GTV growth has been 80%, whereas the market grew at in the 20s. So I think the same playbook we are going to apply on hotels, which is to say, what does the person coming from Bhopal, from Kanpur, from Ranchi, or from Jaipur desire when it comes to hotel booking or accommodation booking, and we'll solve for that.
All right. So then final question before we let you go. We'll push you a lot more for numbers and growth estimates, etc. once you all list. A large part of your revenue, of course, comes in from the train business. And one of the risks is this increase in IRCTC charges as well. So when does this contract typically come up for renegotiation?
So, see, this is a contract which is governed by a policy. There's a B2C PSP policy that IRCTC has, which governs their relationship with all OTAs. It's a uniform relationship with all OTAs that they work with. It's not an exclusive arrangement that we have or any other OTA has. And our contract has been renewed already till FY28. And typically this is renewed under the policy. So I don't foresee a risk there of any sort. And I want to guide one thing that is very important for your viewers to understand, that look, from IRCTC's perspective, right, this is a synergistic partnership wherein we are helping them distribute train tickets to every nook and cranny of India and bringing on board the first time train bookers that sometimes come from small villages. We have 2,481 towns from which we get transacting users. In terms of split also, you must see that revenue-wise, though train appears as more than 50%, when you look at it at a contribution margin level, which is something as a disclosure only we provide at this point, the train contribution margin contribution to the overall pie is about 45%, whereas flight and bus are 55% cumulatively. So I think that pie on the margin level has evolved a lot in terms of diversification and will continue evolving there.
All right, we take your point and, we'll push you for the numbers as well. 3,600 crores, the market cap that your guys are seeking post-listing, which implies that 5.5 times price to sales is what you're asking for at the end of FY24, annualizing your 9-month numbers. That's pretty much in line with Yatra, but a steep discount to Ease My Trip. But that's also because of the big margin differential that there is. But on all of that and more, the next time. Thank you, Alok and Rajneesh, for joining in. With that, we'll step into a short break, come back, get you more on the markets and a lot of stock-specific action. Stay tuned.
Welcome back. Well, most markets are trading in the green this morning, which is good news. The Nifty is still holding with a gain of around 50 points. We've come off a little bit from the top. The Nifty Bank is up 50 points odd. I think all the indices that I'm looking at, they're either up between 50 to around 80 points. So a bit of consolidation is what we're seeing. But just to pull up a few stocks for you on the screen, Heritage Foods, the stock was up close to 10%. That big bounce has got sold into, so that stock should come up for you on the screen. KCP is the other one as well that was up close to around 10%. So remember, these are stocks that move 40% in the last 4-5 sessions. That one as well as almost in the red as we speak. You spotted a few, Manglam?
On Heritage Foods itself, Nigel, it's doubled in the last 12 sessions, so maybe some profit booking can't be ruled out. So as you pointed out, those are a bunch of stocks which we are watching out for. We wrap up on this edition of Chartbusters on that note, and the team of Trading Hour will take the market action forward. Thank you for watching.